So in e-commerce, Etsy missed yesterday in our course member live stream. We talked about, hey, if Etsy misses, there might be an opportunity to buy it, and kind of leaning towards the belief that all e-commerce is going to miss, because since January, I've been making the argument that we want to be out of consumer discretionaries and get away from people spending money online, because the indicators we're seeing, whether it's through web traffic, Google search trends, freight information, shipping information, are just that e-commerce is slowing down. And so what have we seen? We've seen Amazon miss. We saw, especially with weak guidance, we saw weak guidance from Etsy. We saw Wayfair down 10%, Shopify down 16%. You know, Etsy, let's take a look at what Etsy's doing right now here, now that the market's open. Etsy down 17% right now. It's about to be under $90. I mean, it is straight selling off right now. Holy moly, look at that. 17% on Etsy. Let's go to Wayfair just to get the updated numbers. 16% now. Amazon now down 2.7%. And Shopify down 15%, roughly the same as what we had during pre-market. This is a sign that the market is like, oh crap, we should have gotten out of e-commerce in January. Let's get out of e-commerce now. Now, I actually think there could potentially become an opportunity when we get low estimates for Q2, maybe even Q3, and at some point over the next 6 months, I wouldn't be surprised if there's an opportunity to really get into these e-com stocks super cheap. See, Etsy expects revenue in the range of about $540 million to $590, and this is almost 11% to the midpoint below the $628 million target. Etsy only saw its online sales raise 5.2% from a year ago, and the CEO mentions, quote, "We're emerging from an unprecedented time, and with that, Etsy has unprecedented growth. In a world of so many more choices, our guidance implies somewhere between a decline of low to high single digits in the Etsy marketplace year over year." In other words, they're forecasting negative growth. Like, that's scary. Like, nobody wants negative growth in e-com. And so obviously, one of the things that's most interesting, in my opinion, is anytime you're studying a sector that's going down, what I always recommend is take even just one company. You don't even necessarily have to go with all of them. Take one company that you really, really understand, like Etsy, for example. Take that one company and go through the earnings call, because in the earnings call, you're going to get a sense of what the complaints are, what the issues are, sort of the feeling of the executives and the board members. Now, sometimes people wonder, they're like, okay, fine then, Kevin, where do you get the transcripts? Because I really don't want to listen to it. You know, you'd rather hit like Command F and go through it all. Personally, I like using Seeking Alpha. I mean, oftentimes I'll use the Bloomberg Terminal, but you could just use Seeking Alpha. And I'll show you just as an example how you could go through this. So I have not gone through the Etsy one yet, but I'll show you just as an example of what we could do. So the first thing that we could do is we want to look at potentially pricing or pricing power, right? So let's see what we have. Let's see here. This has to do with stock-based compensation. Okay. If the pandemic has taught us anything, it has really strengthened our conviction even more in the enormous size of the price that we believe we have at Etsy, and just dimensionalizes for a second. Okay, that is like a very weird sentence that they've got over here. Usually what I'm looking for is like pricing power in terms of like the executive's ability to raise pricing. See, there you go. Look at that. When we announced the price increase, and keep in mind, this has actually led to a boycott of Etsy over the last few months by a lot of Etsy sellers. So, you know, these are headwinds. But anyway, when we announced the price increases takes up our take rate. So it takes up our ability to continue to spend deeper in the ROI curve without compromising ROI thresholds. Okay, this is like, this CFO likes really big words. What he's saying is, hey, when we increase prices, we can invest more into our marketing budget. Which, remember, I actually like what Etsy does when it comes to their marketing. They do this special thing where they'll advertise not Etsy.com. They'll advertise one of their stores, which are other third-party sellers. And if Etsy converts a lead to that store, then they split the marketing costs with that store. So it's really like no risk for the store, and it's smart spending for Etsy because now they're spending and then actually supporting some of their businesses at the same time rather than just themselves. So I think that's great, and that's what they talk about here. So, okay, interesting. Talk briefly about the price increases here. Let's see if we could learn something about the consumer here. So let's go to consume. All right. I personally couldn't be more relieved to see it. It also means that in the near term, here we go. They're talking about relieved about all the COVID spending that they had, right? It also means that in the near term, okay, here we go. We'll have to fight harder and invest more and continue to earn and grow Etsy's share of the wallet with consumers, which is the only way that our much larger base of sellers can keep growing their sales. We're up for that fight. Okay, kind of interesting if you're talking about having to like fight for share of wallet, because that's a way of implying that competition is getting a little bit more difficult, right? Obviously, you're going to have issues for Ukrainian sellers. I've actually bought 3D printed stuff from Ukraine before, and I think to myself, I probably couldn't do that anymore from those stores. Although then again, I haven't tried because I was really into buying stuff on Etsy during the pandemic, and I kind of lately haven't been, which, you know, oftentimes like you're your own best piece of research, you know, you're your own best researcher, which I think is quite interesting. So people continue. Okay, so here, this is interesting to me because now we start learning about the consumer. Take a look at this. We're emerging from an unprecedented time. This year is going to be unpredictable for us. Okay, well, that's also bad because right now you're signaling that, hey, we might have no idea what's to come, and that there are many moving parts, including both tailwinds and headwinds. And then this is interesting. I don't like this. People continue to be nervous about global events and the economy, and we'll have to fight harder for that consumer's time and money. So I'd like to see, you know, other than just like overall sale metrics, what do they see? Because see, looking at the last quarter is lagging. But when the executives are like, yeah, we're going to have to fight harder. Yeah, we're going to have to try harder. And I'm not actually getting like concrete info. It makes me think they're going to miss again next quarter. It's you gotta read between the lines. Remember, these are sales pitches. And when a sales pitch is weak, it's a red flag. See, like, Enphase's sales pitch last quarter was like, we don't have supply chain issues in ASICs. We're going to kill it. That's basically the tone of the CEO last quarter. And I'm like, I looked at the morning of the Enphase earnings call. We went through it with course members, the old earnings call, the morning of their second quarter earnings, we went through their fourth quarter earnings right before their first quarter earnings, which come out in the second quarter, and we're like, look how like bullish these things are. This is like a good leading indicator for how it might perform, or the stock might perform after earnings, or how their earnings might go. And that's exactly what happened. The stock ran from like $150 to $188. That's great. Okay, so the deceleration we started to experience in Feb. Oh. Okay, this is terrible. This is terrible. This is the opposite of what you have seen in the travel sector. This is the opposite of what you've seen in the banking sector with arguments that consumers are spending more. Look at what they're saying. The deceleration in sales we experienced in February, listen to this line, folks, worsened throughout the quarter. Well, crap. You know, if you're like declining throughout the quarter like this, then where are we now? Like, if we're here now, you know, what's ahead of us? That, you know, like even more of a decline. So, oops. Yeah, I mean, that's quite crazy. So then you've got, from a geographic perspective, 45% of Etsy's marketplace in the first quarter was from transactions where either the buyer or seller were outside the United States. See, that's actually terrible. And so let's touch on for a second why that's terrible. Well, it's terrible because what happens? What happens when you have a situation where the global economy is slowing down? Everything's slowing down in Europe. We just talked about that at the beginning of this live stream. Things are slowing down in China, no doubt. You can't get Etsy sales in Ukraine because you got a freaking disaster going on in Ukraine. So of course, this is a terrible thing for Etsy. I have been enthused by Etsy's valuation coming down, but I said I would wait to earnings. And I'm telling you, so far, this reiterates to me that there's pain coming to e-commerce, and it is not stopping anytime soon. Look at this. Year over year, they had strength because of Germany. Dude, that's bad. I do not want to hang my hat on Germany right now. We just saw that massive manufacturing miss. We just heard what the higher levels over at the ECB are saying. This is a disaster. So the Etsy marketplace category performance was marked by strength in paper and party supplies for in-person events. How interesting. Look at that. People are actually spending more money on the Etsy marketplace right now for in-person events and stuff consistent with reopening trends. I mean, look, I hate to say it, but if we're worried, like if we're focused on reopening trends, people are going to spend more of their money in stores because they're traveling, right? Not so great on the consumer. Let's see what else they say about the consumer. Despite there being more options for consumers, time and money. Okay, great. Let's see here. The strength of the second quarter of 2021 was driven by the tailwinds of economic stimulus, which hit consumer bank accounts in April of 2021. Contrast that with where we are now. Mobility indices are approaching 2019 levels, and pent-up demand may drive this even higher, meaning the possibility of more movement and travel and less time for home shopping. Dude, this is a horrible earnings call. I'm all for buying companies when they go down, but I'm not just gonna buy a stock that's down, 17% because I'm like, oh yeah, YOLO, buy the dip. This is a terrible earnings call that's telling me things are just gonna get even worse. The reopening and macro headwinds and experiences as a company, and of course, are being felt in households and wallets of independent sellers. Yeah, okay. What else do we have here? So here's a question from an analyst. To what extent are you in a relatively favorable position compared to your e-commerce peers, like, Shopify or Amazon or whatever? Great question. So they say, to be clear, Etsy sellers set their own prices, not something Etsy's involved in. Let's see here. Obviously, it's tougher for them to compete against something that's mass-produced. Etsy's a little bit more custom. We know that already. That's why Etsy's interesting in the first place. Yeah, let's see here. If you look at a basket of goods analysis, not chosen... Wait, Etsy sellers set their own prices. It's not something Etsy's involved in. We have said in the past, and it continues to be true, that our sellers have, so far on average, if you look at a basket of goods, not chosen to take their prices up by much at all. Okay, that's actually a bad sign, and far less than what you're reading in terms of consumer inflation. So in other words, if you want to find less inflation, go to Etsy, because people aren't raising their prices. Well, golly, what does that signal to you, folks? It's a very simple thing. There's one thing that signals to you. When sellers don't raise prices, what does it mean? You should be telling yourself this right now. Lack of pricing power. Right? That's a bad thing. Look, I've only been going through this earnings call for 5 minutes, and I'm devastated. This is bad. I honestly don't even want to read any more of the Etsy earnings call. I got enough of the Etsy earnings call. I got it. Yeah, your sellers don't have pricing power. Y'all are on a declining trend of e-commerce sales, which makes me even less interested in remotely considering the other, online retailers, whether that's Wayfair or Shopify. I'm curious though, because of I kind of want to know, hey, well, does Wayfair, for example, have pricing power? Is this just Etsy? My suspicion is usually what you see is these sorts of issues are industry-wide. They're usually not sort of just relegated to one company. It's usually an industry trend. This is why you see, on CNBC all the time, that institutional, oh, we're rotating here now, or whatever, right? Let's try it. Let's here. I got Wayfair right here. Let's do it together really quickly. All right, but just in the last 2 months, since a lot has transpired and rising prices across the retail universe and troubling geopolitical events, our mass customers in the U.S. and internationally appear understandably more focused on where they are spending their money. Okay, this is a horrible thing. Our customers appear more focused in where they're spending their money. Okay, so in other words, our customers ain't shopping at Wayfair. It's a terrible thing. Let's see here. While rising energy prices are headwinds to shipping and fulfillment, some of the biggest pain from last year pains are dissipating. Okay, well that's actually a good thing. I like to hear that. So that's kind of some of the supply chains and logistic problems are getting better. That's a good thing for the broader economy. Doesn't necessarily mean it's better for e-commerce, right? So let's see here. Price points. Okay, doing so, cut the distance. Okay, they're trying to, I mean, they've always been talking about adding more fulfillment centers and therefore lowering the distance that they have to ship stuff to lower costs. Okay, we see customers respond. Okay, interesting. Here we go. So we are already benefiting just as availability was getting better. Now availability is getting better at a very fast rate. This is very Cathie Woodian actually right here. Availability going up at a faster rate means inventories are going up, right? This is your Cathie Woodian inventories. And it's something to pay attention to because that can actually lead to prices coming down if you have too high of inventories. Okay, so let's see. What happens is our competitive retailers, what they've done is they've bought their inventory for the next few months already, and they bought it at a certain price and they've locked in that price. Oh my gosh, they're now low to discount. Oh no, oh no, they're now low to discount because it could put them in a bad position on retail relative to cost while on our platform. Okay, this is a very confusing line here. The supplier's setting their price every day, and that price is driving retail. Wait, that I don't know if that is just a bad transcription, but it is a horrible sentence. But I think roughly what they're saying here is, you know, like you don't necessarily want to drop the price because that signals bad things for the consumers, but basically you might have to drop prices. And so look at that. Right after they talk about having excess inventory, look at what they talk about. If you have extra inventory, you just want to turn it into cash or focus, cash or less focused, or be less focused on the profit margins. This transcription is horrible, right? So basically, let me retranscribe this transcription. More inventory, focus less on margin, just get the cash. That's essentially what he's saying here, or her, whatever. I have no idea who it is. They. Okay, also not good. So what else do we have here? As well as an argument to enrich and ensure accurate and complete product intuition. This enables us to respond to customer needs. Doing so can significantly... Okay, well, that was the distance thing. We already read that. We read this section here. Okay, it's just the opening price point, which is where these folks do their business in home. We have a logistics network that's optimized for deliveries. Big and bold. Okay, whatever. Y'all just yapping over here. We're not... Oh, look at this. Look at this. Aha. Wow. Look at the word they're using. This is terrible. This is actually like all just like bad news so far. Like it's no surprise to me actually now that the QQQ is selling down because it's like, sorry, this is just bad news. Look at this. Okay. If we think, okay, right here, this part. Now that said, if there is a transitory change in the piece of a cost structure that we manage, and we think that's going to abate soon, we're not necessarily going to pass it through and raise the price of the item and then drop it little by little thereafter. Okay, what does this mean, folks? It's literally the same thing as the Etsy call. They're basically, like, Wayfair is literally telling us, inflation is transitory, so we won't raise prices because we can't. This is terrible. I laugh because it's painful. It's quite painful. Anyway, I was gonna put that. There we go. Yeah, no, these are bad. These are bad earnings calls. These are not good. Not happy here. So, quite bad. Okay, wow. So consumers are sucking. And if like those little samples there, you can see it doesn't take a lot of time. Those little samples there are just an example of disaster. So, sorry, consumers, things are not good. But it is, you know, when we start seeing this sort of e-commerce pain, it is a little bit of an indicator that maybe we will start seeing the Cathie Woodian price drops. Maybe she's right. We'll see. We shall see.